Hey, welcome back, traders. John Caruso coming to you here for a post-market update. Today's August 9th, Monday. We're going to take a look back at the trading action here today and what we think might be to come throughout the course of the week. We did have a relatively nonchalant day in stocks. I think the S&P finished around unchanged. The Russell 2000 led the way down 0.4%. The NASDAQ was up 0.2%. But the big news happened off the open last night. About 30 minutes after the open, we did see gold and silver prices hit an air pocket in the market. You saw some algo selling. From what I read, about $4 billion notional gold was dumped off the open last night. We broke some technical levels, and the market just completely capitulated from there. I think we traded all the way back to about 1677 in gold. Gold did rebound significantly off the lows. We're about $50 off the lows right now, finishing the session out at about 1731. Silver also off the lows, but still down significantly on the day, down 3.6%. Now, last week we came out with a video suggesting that we were bullish on gold. We were. And we've had to significantly downgrade that call based on today's move. However, I do still think there's going to be some spots that you could pick over the course of the next few sessions to position on the long side in gold for a move perhaps back towards 1760 to maybe 1770. So that's what I'm seeing right now from an immediate term perspective in gold from now. In terms of what the catalyst was that sparked this move down, obviously the jobs number on Friday was terrific. We did see 943,000 in jobs created. We saw a 50 basis point move down in the unemployment rate. We saw some wage pressure as well. We saw 10-year yields ramp back up to about 130. That's where we're at right now. And of course, that sparked a wave of buying in the U.S. dollar. So the U.S. dollar looks like it's trying to break out here from largely bearish trend for more than a year now to where it has this transition to bullish, which is obviously putting some pressure on the commodity basket and, of course, gold and silver here. Whether or not the breakout stands remains to be seen. We've seen a number of failed attempts to break out to bullish trend in the U.S. dollar over the last 6 months, and they've all failed. So still remains the question whether or not we're going to break out. I think if we get above 93.20, I think that's your answer that we're breaking out. So keep that in mind. We do have CPI coming out on Wednesday, PPI coming out on Thursday, so we're going to look forward to that. We did see some more selling pressure in the crude oil market as well today. However, crude oil did bounce. I think we finished about $1.60 off the low. I honestly think crude oil right now is just going to enter into a choppy trading range. We're going to call 72 on the high side, about 65 on the downside. If we see 65 give way and we close below 65, well, now we've got a topping turnover in crude oil. Crude oil may have already topped. It looks like it has, but we might see some more trading action in between that $6, $7 range in coming weeks. So keep that in mind. That's all I have for you today. We'll look forward to seeing you back here about midweek. We'll do a midweek check-in with you. Feel free to reach out to me anytime, Jay Caruso at RJO Futures. I'd be more than happy to add you to my market letter in the morning. Good luck to you. We'll see you back here next time. Take care.